Hello, good morning, everyone, and welcome to today's morning market review session. Hope we had a good night this morning. All right, so we're going to be kicking off very soon, and but then we're always having latecomers, so let's give the latecomers a little bit of time. So I think we can actually give them till, let's say, 8:06. Let's give them like 3 minutes. 8:06. So we'll kick off by 8:06. Meanwhile, hope everyone can hear me on this live broadcast. I'm seeing a lot of persons here. I hope everyone can hear me, and hope you can see my screen as well. Okay. 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 Thank you, guys. So 8:06, we'll kick off by that time exactly. Okay. Thank you.
Yeah,
All right, so good morning again, everyone. So we're kicking off right away, okay? So normally, I'm sure before now you already know how we actually do a money market review. So first of all, start with looking at the fundamentals, what has been going on in the market. Give me a second, let me share my screen. So we first of all start by looking at the fundamentals, and afterwards before we go into the market, so look at the fundamentals to see what is going on, what is influencing market conditions at the time, to make decisions regarding the market. Okay. So far for this week, on Monday, we actually had we didn't have any major thing going on in the market. I hope you can see my screen, by the way. Can everyone see my screen, please? If you can see my screen, just type a yes in the comments. Oh, okay. Okay, great. Thank you. So looking at the forest factory, there was nothing that actually happened on Monday. We had like a bank. Okay. Just connect your own first. Okay, just leave it, leave it. It's okay.
Oh, wow.
All right. Can you still hear me, please? Can you still hear me? Can you hear me now? Okay. Okay, thank you.
Loud
Sorry
and
about
clear.
that. Okay, great, great. So for Monday, there was nothing major that happened in the market. Then yesterday, being Tuesday, we had a couple of news from the UX zone. And when we're looking at fundamentals, majorly what we want to actually see in the market is what happened in the UX, let's say the US economy, the US market. Basically, that is one of the major things that we actually look at. Yeah. So yesterday we had a news that came out. We have like a couple of news. We had JOLTS, or the job openings, we had consumer confidence, and then we had composite. So all of this data, most of the data that we actually came out yesterday did not come out good for the US economy, right? It was not good for their currency. So job openings were low. We had they had 8 points. Okay, let's just look at what that actually means. So job openings literally means the number of job openings that were available as at the time that this particular report was created, right? So anticipations were for job openings to be as high as 9.49 million job openings, but then they had like lower job openings. And like if there are lower job openings, meaning that employment is still going to unemployment rather is still going to be high, which is not good for the currency, because if there is unemployment, then it means that spending power would actually be low. So literally that was not good for them. Consumer confidence also came out bad. I mean, if there is no employment in town, the way you're going to be managing the little you have, you don't want to spend so much purchasing goods and all that. So literally that was what actually happened to USD. I think that was literally it. We had one from AUD. I didn't really look into that much as in what actually happened there. So, but basically USD, this news that came out from the USD zone, consumer confidence, JOLTS openings, and even the composite, this actually measures the sales of, like family homes, like houses, sales of houses in a particular geographical location. So, and I think this actually came out a little good, but then JOLTS openings and then consumer confidence just overshadowed that particular good news that came from that market, right? And this was the major driving force of the market yesterday. So then for today, from the USD zone as well, we're going to be having ADP non-farm employment change, then GDP quarter over quarter data that is also going to be released today. Then from the Eurozone too, we have German prelim CPI, Spanish flash CPI year over year, and month over month as well. So that's literally it, right? So having that in mind, bearing in mind what actually happened yesterday with the in the US market, for instance, it gives us a whole lot of idea on what is happening in the market and how and what we can actually do or how we can take advantage of that information going forward. All right. So we're looking at the UX index first of all, because this is more like a huge determinant factor when you are actually going to be trading, because most of these instruments that we trade, they are paired against the UX index. So knowing what is happening here, both fundamentally and also on the chart, just gives you like a whole lot of idea on how you can actually trade the market. Okay. So looking at UX index, of course, once this news actually came out, once those particular news that we just saw actually came out, at this just a minute. Okay, so once the news actually came out around this time, this was around let's say 2 o'clock, 2:30, something like that. This was when the news dropped, and once immediately it dropped, you saw US index actually falling very rapidly. Did a very huge selling yesterday, right? So this morning it opened bullish sort of, but then currently we can see that it is trying to continue with the sell, but so far so good. We've already established that the dollar is weak as at this point, so you literally should be looking at entering in for more of sales. So your currencies that are paired against the US dollar, you're looking more at buying those currencies while you're selling the US dollar. All right. So I'm looking at the market this morning for, okay, so let's look at Euro USD first of all. Right, let's look at Euro USD. All right, so for Euro USD, of course, seeing that the market was actually very bullish yesterday, it's no surprise at all, considering the fact that we've just established that the dollar was really, really weak yesterday. So Euro USD was bullish, closed bullish yesterday. So today is actually making a retracement and making a retracement first before it continues on the buy trend, right? So I'm looking at the market. We can the preference for today, our preference is majorly going to be a buy for this currency, but since it is on a retracement currently, since it's on a sell, I think I muted everybody. Okay, let me do that again. I thought I muted everyone before. Let me just do that again real quick. Okay, so all right, so like I said, Euro USD is currently retracing, but then before we take any decision on how we are going to trade the instrument, it is good that we actually look at multiple time frames, look at lower time frames as well, to see what is going on in the market and how we should actually be trading, bearing in mind all the news that we've seen. All right, so I will take us to M15 15-minute time frame to see what is actually going on in the market. All right, so currently the market is between a verified resistance and a weak support, right? So it's between a verified resistance and a weak support. So since we're actually looking at entering more of buys instead of sells, then we can actually enter in for a buy at this weak support. That is, and we're going to majorly going to be using pending orders actually. So if this market is able to come back to this weak support and hopefully it maintains it, then we can enter in for a buy at this point at price 1.08572. We can enter a buy at that point. Then your stop loss should be right below that, right? should be right below that weak support level, because the market can decide to want to continue to go for the sell for probably much longer before it continues for a buy. But then in any case, we can enter in for our buy at 1.08572, then your stop loss at 1.08510. All right, so that is that for our buy entry. Then alternatively, if we are going to enter in for a sell, if maybe this market chooses to continue selling for whatever reason, I would actually want us to enter a sell at if the market comes back to this okay, so not the verified resistance, but then if it's able to like go please, can you mute your mics? Mute your mics, please. I thought I muted everyone. Okay, thank you. All right, so for a sell alternative, so if this market actually like goes below this stop loss, our stop loss for our buy, then we can actually consider entering in for a sell, you know, like entering in for a sell. Okay. Right, so we can enter in for a sell at price 1.08476, then take our profits before the market gets to this price point, price 1.08404. This is more like a turn code support. So if the market's like continues to sell below this week support and probably takes out our buy stop loss, then we can enter in for a sell at price 1.08476, then take profit at price 1.08404. Hope you got that right. Hope you got that. Okay, so that's that for Euro USD. Then moving on to GBP USD. So GBP USD is still the same thing, although it was not the force on it was not as strong. The buy force on it was not as strong as that of Euro USD. But in any case, the market actually bought yesterday, and now it is also on a retracement, just like Euro USD. So, and then you can see that you can see this verified resistance that it is trying to respect, right? So we can actually look go on lower time frames as well. Can go on lower time frames and look at what we can do. So I think on this looking at it on this M15, we can actually enter in for a sell at current market price, right? You can enter for a sell at current market price, then take your profit before this turn quote resistance at price 1.26130. Enter for a sell at current market price, then take your profit before this turn quote resistance at price 1.26130, right? Then alternatively for a buy, like I said, there is a verified resistance right around this point. So if we're looking at entering in for a sell, which most likely this market is going to do later today, we can actually enter for a sell after the market breaks above this verified resistance, right? So if the market confidently breaks above this verified resistance, we can enter in for our buy at price 1.26631, then take our profit at so we can take our profit at price 1.26765, right, for our buy. So we'll look at two more instruments, two more currencies rather. We'll look at USD CHF and USD CAD. Okay, or better still, we can look at USD JPY actually. Look at USD JPY and then we'll look at USD CAD. So for USD JPY, you see USD actually dropping against the Japanese yen yesterday. Even though Japanese yen is very weak, but that's news yesterday. That's weakness of the dollar actually. It's really affected all USD across all pairs, right? So that's why we see this massive sell on USD JPY. But so far, the dollar is actually trying to recover itself a little bit this morning. So that's why you see this buy happening currently on USD JPY. So let's see if there is still room for us to enter a buy on a lower time frame. Okay, so yeah, the buy is actually still going, and I think okay, let me also look at M5. Let's look at M5 to see what's going on there. All right, so there's actually room to still enter in for this particular buy. It's going to be a short-term buy. Why? Because the buy has been going on for quite a while, and you can't be so sure of when it would end, right? So you can enter in for a buy at current market price, just a short-term one, and then take your profit. Take your profit at this minor high that was formed previously. So you can enter for a buy at current market price, take your profit at price 146.593, or you can actually take your profit there or you can take your profit all the way to these untested resistance, right? Before this untested resistance, you can actually trade the market like that. All right, so that's for the buy. Then for the sell, I actually don't see where the sell would actually be taking place. Like this market can go all the way to this untested resistance. You can see how far it is from the current market price. It can get to this untested resistance and then start selling back from that untested resistance. So if that actually happens, which it could, because there is not a lot of resistance on even on lower time frames, this market is not like experiencing any major resistance. It's not going to be experiencing any major resistance. So it has potential to get to this untested resistance. So possibly if it's able to get to that untested resistance, you can actually have a what do you call it now? A sell is this sell limit pending order, right? At this untested resistance. You can have your sell limit there, and then your stop loss right above that untested resistance. So your sell limit at price 147.306, and then your stop loss at price 147, this is too high. Let's say 147.477, your stop loss there. Then you ride it all the way, take your profits where it is convenient for you, or where you feel like maybe you've made some good money, or you see the market experiencing some sort of resistance. Okay, all support levels basically. So that's that for USD JPY. Then moving on to USD CAD. So USD CAD is currently at a turncoat resistance. USD CAD here was has also been selling, and it was selling yesterday rather. So this morning it made some sort of buy moves, and currently it is at a turncoat resistance. And you know what happens at turncoat resistance points or resistance points? Like there is room for the market to actually sell at those price points, right? So let's see if there is room for this market to actually sell, or if we can enter at the price it currently is. Okay. All right, so like several times this market has tried rejecting this verified resistance several times this morning. Like this is 1, 2, 3, 4, 5, 6 times it has actually tried rejecting this verified resistance. So most likely it is actually going to hopefully is able to maintain that. We can't be so sure, actually. We can't be so sure. So how I would want us to enter this market is to go in for a sell stop, right? Go in for a sell stop. Let's say if the market is able to come back down to, or better still, we can actually enter in for a sell at current market price, right? We can enter for a sell at current market price. Then our stop loss will be right above these resistance levels that it formed previously. So we can enter for a sell now, and then take our profit right about these areas where it found like a minor support level, right? So we can enter in for our sell like that. Then alternatively for the buy, if it breaks above this turncoat resistance, then this our stop loss level can become like our entry point for a buy, and then take your profits right above that point, not too far from there. Okay, so you can enter in for your buy at price, your buy stop too, at price 1.35785. Then you take your profit at price 1.35863. All right, so that's that for the currency market today. I'm going to hand over to my colleague that will be taking us on commodities and on the indices market as well. All right, thank you.
All right, good morning, everyone. Um, my colleague has taken us on fundamentals, and she has also taken us for currencies as well. So try to do some indices and maybe gold. All right, maybe gold. So currently I'm on US 2000. If you can hear me, please type yes in the comment section. If you can hear me, please type yes in the comment section. Okay, nice. All right, so I'm on US 2000 presently, and from what we can see, US 2000 is clearly is clearly on an uptrend. If I was to minimize this, you see that the price has been going down, and it came to this verified support. You can see these two double bottoms, and then price is now currently here. So price has been going up, right? Now, in an uptrend, you're looking for what? For buys, mostly, right? Price is currently retracing now. Price is currently what? Retracing. Now, we want to look at the possible area where the price is going to, it has gone up, is retracing. Because the trends and uptrend, we're looking for mostly what? Buys, right? Now, looking for those buys can be tricky sometimes because you are looking for where the price would likely what bounce off and what start going what up. Okay, where to likely bounce off and start going what up. So what I will do is to use my Fibonacci retracement tool. Click on my feed. Click on this this lower this low, and then drag it up to this high here. So we are probably looking for price to bounce. You can see that there's a moving average here. There's a support here. We're probably looking for price to bounce around this 8.2 Fibonacci level. Okay. We're looking for price to probably bounce around that 8.2 Fib level. So what we want to do is probably sell. We want to sell when price gets here. You want to sell when price gets to 1893.2 and look to take is, but this sell is like a temporary sell because like I said, the trend is what is upward. So you want to sell when the price gets to 1893.2 and then take your profit on the sell at 1888.1. 1888.1. So okay, so like I said, you're expecting price to get towards here, towards this area, this 38.2 Fibonacci retracement level. You're expecting price to get there and probably bounce off, right? Now, because this, look at this candle. This is a long candle, right? It's really long. This buy candle that went up really high. So at least we're expecting at least 38% retracement at the least for before price can begin to go up. Like I said, it can be a little tricky. Can be tricky because right now price is on a it's kind of rejecting somewhere here, right? Somewhere here. You might say, oh, let me go come and enter this trade now, which I don't think it will be a safe thing to do. So you want the price like for structure to form. That's what to call like a structure. A structure will be like, okay, candle is going down. then you want a bullish candle to appear, right? Once a bullish candle can appear, something like this, that will be the formation of a new structure. So you can now take the trade from there, right? So like I said, you are waiting for price to get, so you can enter a sell at 1893.2 for US 2000 and take your profit on the sell at 1888.1. Now, from that 1888.1, if you look at my chart, you see that there is a support region around there, here. Around here, there's a support region here. So these are like areas where you are looking to do what? Just down here, basically, like all of these places are like areas where to likely buy from. Okay. So you want to take advantage of those areas and make some money for yourself. You can see that there's a moving average here, which is going to also act as a support. If you can hear me, please type yes. If you can. If you can hear me, please type yes. So when this now should do US 100. You can't run now. I'll do this thing. So this is it, right? Like I said, around this region, you can take a screenshot. This is where, like I said, the tricky part is trying to get where the price will go up. Do you understand? It should come down. So price has gone up. You can see this very long bullish candle. Price has gone up. It has gotten to this high. Now it is retracing. The problem is at which point is it likely to retrace? And I gave us where price is likely to retrace from around this state. It's either this state 8.2 or the 50.0 or 61.8. This is what we call the golden zone in Fibonacci. So price might likely retrace from those areas. That's why I gave us a sell entry at 1893.2 and a take profit at 1888.1 when it comes to US 2000. Okay. 1893.2 TP 1888.1. Now, once price gets to this region, you want to be looking out for a buy, right? So once price gets into that, once price goes below or from 1888.1, from the take profit of your sell, if you are putting take profit for a sell, it means that you are probably expecting the price to start, going up from that point, right? Okay, so from that 1888.1, in fact, from where I drew this line, this color, from where I did this coloring, you want to look out in those areas. Okay, you want to look out in those areas. So that is my take for US 2000. Let me go to US 100. Should I go to D30? D30 might be moving now. Let me check D30. All right, for D30, what is D30 doing at the moment? D30 is on an uptrend, right? You can see that D30 is on an uptrend. It went down, it went up here, went down here. Now it's currently upwards. D30 is currently on an uptrend here, right? Okay, so let me draw my closest support and resistance to this price on 1 hour time frame. So this is where this downtrend kind of started from somewhere around here. But what I want to do now is use my Fibonacci retracement to see the likely areas where this price might retrace from. Right? So price is currently in the golden zone, 38.2, 50.0, 61.8. It's currently in that zone. Let me add my moving average to also help. Right? So price is currently in that zone. It's currently in that what? In that zone. And it's currently rejecting off the 50.0 Fibonacci retracement what? Level. Okay. So we are looking for some kind of rejection from somewhere around there, right? Okay, so what we want to do is place our buy above the 38.2 Fibonacci retracement level and take our profit at the 100.0 Fib level. If you are going in for what? For a buy, right? If you are going in for a buy, you want to enter that buy if price can get to. Right now, price is below that particular level, so we're expecting a kind of push up, from this region. You can see that there's plenty of support. Let me draw this that particular region where price is kind of rejecting from right now. So price is kind of rejecting from these areas, right? So this is like a buy zone. So we're expecting that price, comes down and is not able to go below, and then it starts to push up, right? Starts to do what? Starts to push up. So for the buy on D30, what you're looking at buying, if price can get to 15972.4. 15972.4. 15972.4. Then take your profits at 16028.8. At 16028.8. Okay. 16028.8. Okay. Yeah. So what we probably want is for this particular candle to close. If this part you can see it's kind of going up. If this candle can close bullish, then that would be that a new structure has been formed, right? It means that this is like a structure. This is another structure here. It means that okay, the candle closed bullish, then from there you can buy. And look at what happened here around that point. Can you see what's happening here? Here, look here. You can see what happened when the candle went up. Once this candle closes in the next 3 minutes, on the next candle, you probably should be looking for that what buy on US on D30. On D30, right? Okay. So let me go to US 100. For US 100, like I said, there was also this very big bullish candle that went up, right? Candle went up. You can see it's just rejecting from this resistance, right? But now this is the area where we are looking for the candle to likely retrace from. Look, the candle has gone from here. It went from here all the way to this point. Now, if you're expecting a retracement, at least, let's see if it can retrace to about 38% of that. Look at where 100 is. Look at where 0 is. So we are saying that we are expecting the candle to likely retrace to the 38.2 retracement level, right? There might be some false retracements. I don't think you want to get caught up in those false retracements, right? If you look at this, if you look at what's happening on US 2000, you will see that this price is kind of rejecting here. This is not what we're looking for. We are looking for what you call structure, right? Like for a structure to be formed, that is actually what we are looking for. By structure, what do I mean? I mean that what has happened here before. At times we are hoping that it happens again, right? But we don't want it to happen maybe around here. So it's likely that this is just like a false retracement. If it can come down to this point, this buy zone, then we can take it with more confidence. But right now, this buy is kind of tricky, so I wouldn't want you to fall into that trap of trying to go in for this buy here, right? Until it gets to this particular zone that is colored. So for US 100, you can see this same zone around here. This is like the golden zone where we are expecting the price to do to retrace. We're expecting a kind of retracement around that zone, right? That is what we're expecting. So you want to go in for a sell if price goes below here. You want to go in for a sell on US 100 and take your profit at this 38.2 fib level. Okay, you want to go in for a sell and take your profit at 1537.96, then take your profit at 15307.06. For the sell on US 100, you want to go in for the sell at 1537.96. 1537.96, and then you want to take your profit at 15307.06. 15307.06. 15307.06. So, when price gets into this zone, then you won't start looking for buys around that zone. So you can take a picture. This is on 15 minutes. You can take a picture here and look at where those zones are, right? Take a picture of this chart. Take a picture. And this place where I painted this, what color is this? This sky blue. This is like the area where we're expecting buys. And then you can see that this moving average is resting on the 50.0, is aligning with the 50.0 Fibonacci retracement level. Okay, it's aligning with the 50.0 Fibonacci retracement level. All right, so that is where you want to now be looking for a buy. You can take a picture of it so that you know where we are looking for likely price retracement. Although it's kind of doing that here on 5 minutes, on 15 minutes, where the price is actually going up right now. But that might be a trick, right? Might be a trick. You could actually take that buy from there, but that would be a bit risky. Your confidence level at that point will not really be what's the word? You'll be doing it with caution. If you're going to take a buy from here, because you can see that a bullish candle there's been a kind of rejection here. A bullish candle has formed, then another bullish candle is formed. You can take a buy there, but just know that you're doing it with some level of caution, right? The best place for us to want to take a buy will be around this zone, right? Will be around this zone. So if you're the kind of person who likes to take risks, you want to probably enter a buy at the current market price, but you have to do it cautiously, right? You have to do it cautiously, because this buy can just be a temporary buy, and then price will start coming back down to try and go into these zones here. But if price comes down to this 15367.96 price area, you want to now go for that particular sell. for that sell down to this zone where you now be looking to what to buy from. No, I gave an entry point for the sell. I said this buy that is happening now, it's temporary because the price might just buy a little bit and then start coming back down. If you are the kind of person, if you want to scalp, you can probably scalp this on a buy. You can scalp this on a buy and then see and then wait for price to go to that fib retracement level before you start looking for buy opportunities. And take a screenshot of this, like I said. Take a screenshot. Look at the areas where those three lines, 8.2, 50.0, and 61.8, the likely areas where I'm expecting price to bounce from. Okay. Okay. All right. So that is for US 100. Okay. That is for US 100. US 500 doing the same thing. Look at US 500. This is okay. Okay, it was not. Let me refresh this. Now US 500 is also on an uptrend. Look at that's formed this low. There's a low here, and then there's a high here, right? So that is where we are going to be connecting the low and the high, the Fibonacci retracement to see where the area of retracement is likely to be from. Now you can see that that 8.2 Fibonacci retracement level is right on is aligning exactly with this turncoat support area here, right? It's aligning with that turncoat support area there. So what are we looking to do? Now look at price is kind of retracing again here, but I said this, if you are a scalper, you can scalp this buy, you can just be entering buys and coming out. But where we really want to be looking at for our buy entry will be around what this zone here. Maybe down to, first of all, this is where we are looking for structure. By structure, what do I mean by structure? By structure, I mean, like the candle has gone down, then a bullish, like this is an example of a structure here. This one now, here. This is an example of structure. So you have like a bullish candle, sorry, a bearish candle, close bearish, then a bullish candle now forms. Then after a bullish candle formed, on the next candle, you're now going for that buy. Okay. So you can see that is what is happening here. It seems like a structure is forming here, like I said. So you can scalp it here. But what you really want to do, like I said, is to buy around what this region. It doesn't have to be, it can be 38.2, it can be 50.0, it can be 61.8. But at least you want to first of all consider 38.2 and 50 before you now consider 61.8. So what you want is for this, what is happening here, to form on those levels before you can now decide to take your buy. Because this buy you're seeing here might just be temporary. Don't want to get caught in it, trust me, right? You don't want it to just do this small buy and then start coming back down. So for US 500, you want to go in for a sell if price can trade down to 4497.2. If price can trade down to 4497.2, you want to go in for a sell and take your profit at 4487.46. 4497.2 for the sell on US 500, and then take your profit at 4487.46. 4497.2 for a sell on US 500, and take your profit at 4487.6. Like I said, this buy is strict. This buy that is happening now, you can scalp it, but you really would want to wait for price to get into this zone, this Fibonacci, this golden zone, the 38.2, 50.0, and 61.8. Those are what we call golden zones, right? So you want price, get into those areas, then you want to be looking towards to buy from there. So you can take a picture. This is on 1 hour. You can take a picture and then take a picture, and then you want to see what is going on there. Okay. All right. So that is my take on buy. No, didn't. Okay. So like I said, for the buy, you want to wait for price to enter into this zone. Okay, you want to wait for price to enter into that zone. Then you can sell from 4497.2 down to 4487.6. If you're a scalper, if you want to scalp, you can scalp this buy. You can just keep scalping it until you see that price is starting to come back. What's down? Price is now going down. Then you can close the scalping and then start looking to buy. Like I said, this would be the best area to take a buy. Okay. Now for US 30, same thing is happening here. If I was to minimize this chart, you'd see what's happening here. Price has been going down here, and now price is currently on an upward trend. Okay, price is currently on an uptrend. If I was to draw my fib retracement, I'll draw it from here all the way to this, from this low to this high here. Right? Now look at what's happening here. Price is as if it's going up, right? So you can scalp a buy at current market price, probably up to this untested resistance region here. So you can enter in for a buy, you can scalp it, like I said, and take your profit at this untested resistance at 34940. Right? If price gets that untested resistance, you want to start selling from that point as well. Or it's even possible that price might go way above it, right? So you can scalp this buy, like I said, at the current market price. Up here, you can scalp it. But this market has bought and it has not, it's trying to retrace, right? It is trying to retrace. So that retracement is going to be happening, should likely happen around this region here, right? This fib region here. That's 8.2, 50.0, 61.8. This would be like just a very small buy, right? What you want is this kind of buy, this very long buy. That is what you want. That is what you really want, right? You want this very low buy. Just don't want any, just a short buy. You want like a really long one. So you want the candle to really retrace well. Because if you look at what has happened here, candle was buying from this low all the way to this verified resistance. So it has to retrace, right? There has to be some sort of retracement before it starts buying back again. And I'm saying that retracement is likely to occur at this golden zone, right? 38.2, 50.06, 1.8. I also said some of us can scalp the buy up until this verified what resistance. And then if price can get to that verified resistance, based on what happened here, look at what happened to the left. Last time price goes to that resistance, what did it do? It went down. Last time it got there, it went down. Let me check to my left and see if that's happened there. Look at, can you see? Can you see what's happening here? When price got down, got up to that place, what did it do? It went down. Okay. So, but this will be the best area for that buy, for the buy zone on US what 30. For the buy on what US what 30. Okay. All right. So this is my take on this is my take on US 30. Okay. All right. So I think I have done US 500, US 100, US 2000, right? You can have 200. Oh, for the sell on the US 100, you want to go, I said you want to go in for a sell. If price gets, I sent a picture. I think I sent a picture right now for US 30. This is what was that? Is this, yeah, for you, I sent a picture on the chart. If you look at the chart, if you look at the picture, you would see I sent a picture on the chart. Go up and look at the picture. Sent a picture on the chart. If you go up, you see the picture that I sent. So that verified resistance area, you can see that there was a rejection there. You even see an inverted hammer there. So that is the area where you might be looking to sell from once price gets to that area. That is my entry. That is where, like I said, if you want to be scalping upwards, and then once price gets to that verified resistance, you are looking for that sell entry, right? You're looking for the sell entry. Okay. All right. I want to talk about gold. Okay. So we're on gold now. Look at the same thing is happening here. You have all these very long candles. Now, I want us to understand something there. When there's a trend, you always notice that we have what you call impulse and retracement. The impulse is always very clean, while the retracement is always noisy. Look at the impulse here. Look at this buy impulse. Clean, sweet. Look at the retracement, noisy, right? Look at this buy impulse, clean. Look at the retracement, noisy. Look at this buy impulse, clean, retracement, noisy, right? Buy impulse. So that is what you want to be looking at, right? So we are in an uptrend. Let me minimize. Clearly, price was going down here. Now price is currently what? Upwards, right? Price is currently in an uptrend. Okay, so I want to draw my fib retracement tool from this low all the way to this high here. Draw it this high, yeah. Now you can see what has been happening. Price has been going, it's possible that the price might come down here and push up, or it might even push up from here, right? It might even push up from up there, right? So let me draw my trend line. Let me draw my trend line. Wow. Now this trend line is subjective. It does not mean that this thing is supposed to push up from here, right? Maybe I should do that. It does not mean that the price is going to push up from here. I'm just drawing it just for subjective purposes. But like I said, this trend line is subjective. It means that I do this trend line here does not mean that I'm expecting this thing to push up from here, right? So it's possible that this price might go up from here. For this uptrend to continue, price, let me take it out. Price will likely do like come up here, bounce, 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 and then keep pushing up, right? So let us see if there's a kind of support somewhere right. Nice. You can see. See on 5 minutes, there's a support here. There's a support there, right? So which price has been ranging from those areas. So this is like a region. You can see that the market is ranging, right? So what we're waiting for is like either a breakout to the upside or a breakout to the downside. So for gold, if price can break out, below here, you want to go in for a sell on gold and take your profits here. So for a sell on gold, you want to enter a sell if price can get to 1933.7. If price can get to 1933.77, you want to go for a sell on gold. You want to go in for a sell on gold and take your profit at 1931.447. Then if it breaks to the upside, you want to enter a buy if price can get to 1938.52 and take your profit at 1941.48 for gold. Okay, you can see that price has been ranging. Price has been ranging. So for the sell on gold, you want to enter if price can get to 1933.77 and take your profit at 1931.47. And then for the buy on gold, you want to take a buy if price can get to 1938.52, then take your profit at 1941.48 for the buy on gold. Okay, so we've done a couple of these, and we did one about 5 indices, and that is my take for today. Okay, that is my take for today. Thank you very much. Thank you very much. Mr. Luda says, please always make it snappy. Your battery is getting low. It's not my fault if your battery is getting low, Mr. Dive. You can see people trying to tell me to take gold and to take this and take this and take that. We are taking 10 instruments. So we try as much as sometimes we don't even do up to 10. I don't think we're supposed to take 10 instruments. Now we are taking, I think, 9. So if I was to take the 10th one, that means I'm going to spend maybe another 12 minutes. Okay. So I don't know how you want us to be. We try to be as fast as possible. Right? So if your phone is not charged, you do this in every morning, you can charge your phone. If you do this for 45 minutes, we are super fast. You won't be able to get anything from here. I thought somebody said that the first speaker was too fast. She was trying to make it snappy. Now I'm trying to be slow. Now I should be fast. You know, so Mr. Dayo, next time charge your phone so I can last the duration of the meeting. All right. Thank you, everybody, and see you same time tomorrow. I don't understand what to mean by package used for mirroring the perception of trade. I don't understand that question, please. I don't understand it at all. I don't understand mirroring the perception of trade. I really don't understand. If you have to speak to your account manager, probably this will understand better. Thank you, guys, and then wish you the best of today. Bye.